Hello and welcome back to another video here on StratCap. In today's video, I want to take a closer look at a topic that has become increasingly important for investors over the past few years: Europe's military buildup. Since the beginning of the war in Ukraine in 2022, the security landscape in Europe has changed dramatically. Many European countries are now increasing their defense budgets, in some cases more aggressively than we have seen in decades. And that raises a very interesting question for investors. Which companies could benefit the most from this development? But before we begin, a quick disclaimer. This video is for informational purposes only and should not be considered financial or investment advice. Let's start by looking at the bigger picture. When we examine the numbers, it becomes clear why this topic has attracted so much attention from investors. In 2024, European defense spending reached roughly 343 billion euros. For 2025, spending is expected to increase further to around 381 billion euros. That would represent approximately 2.1% of Europe's total GDP. To put this into perspective, only a few years ago, many European countries were spending significantly less than that. Since 2020, overall defense spending in Europe has increased by more than 60%. This suggests that what we are seeing may not simply be a short-term reaction to one conflict, but rather the beginning of a longer-term structural defense investment cycle across Europe. However, rising defense budgets do not automatically mean that all defense companies benefit equally. In reality, a large share of these additional funds tends to flow into specific segments of the industry. For example, munition and replenishment systems, military land systems and armored vehicles, air defense, and radar and sensor technologies. These are exactly the capabilities that have become critical in modern conflicts, and that's why investors often focus on companies that are strongly positioned in these areas. So let's take a look at 3 European companies that could be particularly interesting in this context. The first company I want to discuss is Rheinmetall. Rheinmetall has become one of the most important defense companies in Europe. The company is especially strong in 2 key areas: ammunition production and military land systems. And ammunition in particular has become extremely important. The war in Ukraine has shown how quickly large quantities of artillery ammunition can be consumed, and how difficult it can be to replenish those stockpiles quickly. As a result, many European countries are now investing heavily in expanding production capacity and resupply programs. And this is exactly where Rheinmetall is very well positioned. If we take a look at the stock chart of Rheinmetall, we can clearly see how geopolitical events can reshape the valuation of defense companies. Here in the chart, I've highlighted February 2022, the moment when the war in Ukraine escalated dramatically. And from that point forward, we can see the market starting to reassess Rheinmetall. The stock rises sharply in a relatively short period of time. One major reason for this move is that many European governments quickly announced large increases in defense spending. And further to the right in the chart, you can see how the stock continued to move higher as defense programs expanded and military budgets increased. For many investors, Rheinmetall effectively became a direct play on European rearmament. The second company is the Swedish defense group Saab. Saab is particularly strong in areas such as radar systems, air surveillance, and advanced sensors. These technologies are becoming increasingly important because modern conflicts are more and more defined by missiles, drones, and aerial threats. Countries therefore invest heavily in systems that allow them to detect and track threats early. And Saab has built a strong technological position in exactly these fields. This is especially relevant in Northern Europe, where several countries are currently expanding their defense capabilities. If we look at the Saab stock chart, we can see a similar trend. In the chart, I have highlighted the period when discussions around NATO expansion in Europe started gaining significant momentum. From that point forward, the stock began to show stronger long-term momentum. In other words, the market appears to be increasingly pricing in the possibility that Saab could benefit from this shift in European security policy. The third company we'll look at today is Leonardo, based in Italy. Leonardo is one of Europe's largest defense contractors and has a very diversified portfolio. The company operates in several key areas, including defense electronics, sensor technologies, helicopter programs, and major European defense cooperation projects. Defense electronics and sensor systems are becoming increasingly important as European militaries modernize. Modern armed forces rely heavily on network systems that can collect, process, and distribute information rapidly. And Leonardo has strong capabilities in exactly these technologies. If we look at the Leonardo stock chart, we can also see a similar pattern. Here I've highlighted the beginning of the broader European defense investment cycle around 2022. From that point onward, the stock shows a clear upward trend. As defense budgets increase, investments don't only go into traditional weapon systems. They also flow into reconnaissance technologies, electronic warfare systems, and digital battlefield capabilities. And that's one of the reasons why Leonardo has also been revalued by the market. Despite these developments, it is important to remember that defense stocks, like many other sectors, also carry risks. Defense budgets depend heavily on political decisions. Governments can change priorities, and public spending plans can shift over time. It's also possible that part of the expected increase in defense spending is already priced into these stocks. Short-term price movements often reflect market sentiment rather than long-term fundamentals. So to summarize, we are clearly seeing a trend where Europe is increasing its defense spending significantly. And this trend could continue for many years as countries work to modernize their military capabilities. For investors, that means one thing in particular: it's worth looking closely at which segments of the defense industry are actually benefiting from these changes. Companies like Rheinmetall, Saab, and Leonardo operate in exactly those areas, from ammunition production to air defense to advanced defense electronics. And that's why they are currently attracting so much attention from market observers. And that's it for today's video. I'd love to hear your thoughts. Do you think Europe's military buildup will remain a long-term driver for defense companies? Let me know what you think in the comments below. If you enjoyed the video, feel free to leave a like. And if you want to see more content like this, consider subscribing to the channel. Thanks for watching, and I'll see you in the next video.